Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar for July 15, July 19, 2019. The story in the com dollars actually is an upward tilt, certainly, but ultimately, actually, the levels really haven't changed much from last week. We're still going to be facing the very, very key big resistance levels. We sort of did a round trip down and then came right back up. It is bullish that we bounced back up and are now testing the upper resistance, but it's still very much an open question whether that resistance is going to be broken. So Aussie, still 69.70.50, and that 70.50 is very, very important resistance. Caddy is really having a hard time at the 130 level. Now that 130 level, we did come down to the 130.30 a couple of times, but that 130 level is not just the big round number support level, it's also the 500 SMA, and there's just a lot of confluence of support here. So we're going to need a much bigger push in order to get it down through there. And Kiwi bounced right back. Now, Kiwi was a very, very strong, hard bounce today, surprisingly so. And I think a lot of it, honestly, I mean, Aussie and Kiwi just kind of bounced back on the idea that perhaps Fed is going to do more than one and done, and it becomes a yield play again. Although, honestly, it's sort of very, very hard because U.S. 10-year yields actually went up, but Aussie and Kiwi had a kind of a delayed reaction. There is a lot of short covering, positionality, summer doldrums, all sorts of, I think, very confusing price action. So trying to assign intelligent, clean ideas to a lot of what's going on right now is very much an open question. And I would take everything I say with a grain of salt. But just looking at levels right now, in terms of just purely objective levels, we are facing key resistance to the upside, and that should give you room for pause here if you want to get long on a lot of these things. The calendar itself has some interesting data this week. As a matter of fact, the com dollar data is actually more important than the major data. We have the Kiwi performance services starting of the week. That's going to be bullish. Kathy is bullish that number. We have the CPI, which is bullish. All of that does provide a generally bullish tone for Kiwi to the upside, but again, it's facing that 67.50 resist as we go forward. Then into the middle of the week, the middle of the week around Wednesday, we have our typical mid-month Australian labor data. That should be interesting. Kathy's very bearish this data. This actually could set us up. I'm going to look again at Aussie Kiwi on our crosses section because to me it could really set us up as a potential cross trade into the week. Because if we do get negative Aussie data, certainly gives us an up leg on that. And then lastly, we get a lot of Caddy data, retail sales. Here we're mildly bullish. The Canadian data, we've actually been, the Canadian economy has surprised significantly to the upside over the last 2 or 3 months, and it should continue to do so. So here you have this sort of modest outperformance going forward. All of this sets us up essentially on a short Aussie, long Kiwi, long CAD possibilities on the crosses. Let's take a look at the charts here and just see how the com dollars organically look. So here's Caddy, and this is what I'm talking about here. So yes, very, very powerful downward move, but we are smack dab against these very, very key levels over here, as well as the 500 SMA, which is effectively at this point, where's the 500 SMA? 29.84, right? You can see it right there. I mean, it's all, that whole area of testing the big number, certainly going to be big support. If that breaks and we go to 29.50, that's a very, very significant break, and it's really, I think, suggests a huge change of trend here because you have this massive distribution of Caddy over essentially all of 2019 that now finally makes the full round trip to the downside. The one aspect of here that is interesting here is, and why this could be a development worth thinking about for more than just a day, is BOC really does not want to cut rates, and BOC is much less dovish than everybody else. So if we get into this dynamic where the Fed is cutting and the Bank of Canada is reluctantly kind of staying on the sidelines, that really provides pretty serious scope. They're going to be forced, I think, ultimately, if the Caddy gets down to 28, 27, the exporters are really going to force them to have to cut in order to compete. But from here to there, there's still, I think, a lot of scope to trade here. So overall, if you're looking at this from a big picture point of view, very, very big distribution top. The bounce back here probably takes us to 35.50. That's about it. The 20 SMA kind of caps any upside moves here. Caddy is notorious, of course, for making one move forward, 2 steps backwards. So there's a serious possibility here that we could have a bump back up. If we get any kind of positive dollar flows certainly get some short covering. But I think the short covering really looks much more half-hearted at this point. We made fresh lows on this leg. This leg was at 30.37, and this leg today 30.18. Not a significant low, but still that just shows you the momentum still. There's still more downside momentum here, and I'm sure that they're just kind of smelling the 30 here. They really want to test the 30, and I think they're going to come for it. The question is what happens after that. The next couple of days post 30 is going to give us a big tell whether Canada is going to be sort of bouncing here, or we're really going to extend and break the 500 SMA. Australia, on the other hand, very powerful, nice big breakout. So we sort of came back down, tripped all the shorts into a short over here, and then came right back up through the 20 SMA. But now we're right back against this very, very significant level. And if Kathy is right and the labor data is weak, that really sets us up for essentially smack dab rejection of the 70-50 level, come back down and puts us on a relative weakness path in the Aussie. Kiwi also looks quite good. Kiwi really did a massive, this was a great reversal candle, and Kiwi gave a super strong upside move. But here again, Kiwi is very much stymied by the resistance at 67.50. And I just find it hard to believe that if we're in essentially a rising U.S. rate environment right over here, that we're going to get much more further upside in any of the high yield calm dollars. Strangest things have happened, and you got to watch the price action. But generally, my assumption here is you got to sell the resistance levels here on the assumption that U.S. yields are just not going to collapse back down. And if that's not going to happen, we're going to get some profit taking back down. Having said this, though, both Bossy, Kiwi clearly made some very significant long-term bottoms. We're trading still higher lows here. Whatever correction we get, it's probably a correction down to the SMA. So you can try to buy the dip. But if you're trading the upper edges of this ranges, I think a sell is better than a long at this point, on the assumption that we're just not going to get too much momentum to the upside. That's how the calm dollars set up. I wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.